Welcome back to my world of stocks. My name is Ale, and today we're going to be doing the most highly requested video since the beginning of the channel, and that is to talk about my entire stock portfolio. Now, I've been reluctant to make this video for two primary reasons. Number one, I worried that people would look at my stocks and try to copy them and just kind of mimic my portfolio, which I think is a horrible decision in any scenario because we're all different investors. Some people are short-term traders, some are long-term investors, some have different risk tolerances, some are fundamental, some are technical. In any case, we should all be making our own decisions based on our own extensive research. We can share opinions, but we should be making our own decisions. Number two is that this is the internet, and while the majority of you guys are amazing people, I've had a lot of fun. It's been a great pleasure to virtually meet all of you and talk with all of you. There will always be crazy people on the internet, and there will always be trolls and people that will try to use your personal information to mess with you. So for that reason, I've always been reluctant to give out a lot of my personal information. Having said that, I'm willing to compromise. And so in today's video, I will be sharing with you guys every single stock I own and what percentage of my portfolio every stock makes up. And I'll even tell you guys, if I'm investing in them a lot longer, what my thoughts are. I'll give you a couple quick reasons why I like those stocks. But I'm still hesitant to give out the exact dollar value of my stocks and my portfolio. Also keep in mind that a lot of my family and friends watch my videos, and so I don't really want everybody to know exactly the dollar amounts of every stock I own and all that kind of stuff. So I think that's kind of a reasonable compromise. But if this video is well received and you guys enjoy it, then maybe I'll consider adding more details in the future and doing update videos on my stock portfolio. Okay, and before we start, just gotta mention one last thing. I am invested in a lot of different stocks. Don't be shocked when you see how many. It's not like I just woke up one day and bought 13 different stocks. A lot of people say, I bet this dude is rich. I'm not rich. Trust me, I'm not even close to being rich. I've been investing in the stock market for a very long time, many years, and I buy stocks very slowly, little by little over time, and build up long-term positions. And a lot of times I actually buy stocks using fractional shares. Like if I take my budget for stocks out of my income, it's not even enough to buy like one share of Amazon, which is one of my biggest stocks. So when you look at that, don't think, oh, this dude buys Amazon at around $2,000 a share. No. I buy fractional shares many times with several stocks. Okay, so just kind of keep that in mind. My portfolio is not really as big as you might think it is. But anyway, this is going to be a very fun video. Hit the like button if you like this. Let's get started. Let's take a look at my portfolio. Alright guys, right off the bat you can see that my three largest stocks alone on the right hand side there make up a little over 50% of my portfolio, which is much higher than what I typically want that to be. Normally my top 5 stocks would make up about 50%, so not 3, it would normally be my top 5, and those are the stocks that I consider my safest long-term investments that I usually plan on holding for decades unless something very drastically changes with the company or I happen to need the money for something else. But the problem right now is that stocks number 4 and number 5 are much newer positions for me, so they haven't become big enough positions yet, and I've ended up putting more money into my top 3, and they've also performed extremely well recently, so the percentages just happen to go up. In any case, coming in at number 1, that's going to be Microsoft, ticker symbol MSFT, at a massive 22% of my portfolio. Now, they used to be my second largest stock, but they recently climbed up to be my biggest, and when looking at their performance, they've been absolutely on fire, climbing by over 200% in the past 5 years. And what I like about Microsoft is that they are also a pretty good dividend growth stock with a double-digit 5-year growth rate and 16 years of consecutive growth. It's also a company that I am extremely familiar with because I play Xbox, I have Windows PCs, Windows laptops, I have a Surface tablet, and I use a lot of their software like Microsoft Office all the time. And the company has phenomenal management that has led to outstanding performance. In their last quarter, they did over $26 billion in sales, which is already gigantic, yet they are still growing at rates that you typically see in much smaller companies, with sales jumping year over year by 14%, with profits also climbing by 19%, and most of their products and services climbed by over 20%, with Microsoft Azure alone climbing by 73%, which is their huge play on cloud computing that competes with Amazon. And speaking of Amazon, they come in at number 2 in my portfolio at 16%. And when looking at their performance, they've also done extremely well. climbing by over 400% in the past 5 years. And just like Microsoft, this is another company that I really believe in for the long term, and I actually think that they have a decent shot at being the first company to reach a $2 trillion market cap. Because if you look at their performance, it's just insane that they are so large, yet they continue to grow at these rates, with sales jumping from a monstrous $107 billion in 2015 to more than double that at over $230 billion last year. And despite their history of always reinvesting their profits back into their business, Amazon has recently started to grow their bottom line as well, more than tripling their net income last year alone versus the prior year. So over the long term, I think Amazon will continue to perform very well, and it's a stock that I plan on holding for decades, just like Microsoft, unless something fundamentally changes. Alright, and that brings us to stock number 3, which is of course Disney, ticker symbol DIS. Now, you might be confused as to why you haven't seen them yet, as they used to be for a very long time my number 1 largest stock, but I have to admit that I cashed in some profits recently after they reached record highs because I needed the money for some personal reasons. But it still remains a very large, long-term position of mine at about 15% of my portfolio. And when looking at their performance, you can see that they've been a bit bumpy over the past 5 years, but are still up by over 60% over that time, and most recently they've soared by over 25% this year alone. Much of that success is due to their enormous movie studio that continues to produce blockbuster hits through Marvel and Star Wars, their world-class resorts and theme parks that continue to rake in very high sales, and most recently they've decided to expand even further, this time taking on the video on demand streaming market, fueled by their massive $71 billion acquisition of 21st Century Fox assets that they'll be using to pump valuable content into their Hulu and Disney Plus streaming platforms. By the way, Disney also pays out a decent dividend that admittedly is pretty small, but the payout ratio is also very low, and they have a double-digit 5-year growth rate with almost a decade of consecutive growth. And that brings us to stock number 4, and that's going to be a new one that I recently started buying at the end of last year when the market was tanking, and that's AT&T, ticker symbol T, at just about 13%. Now, when looking at the stock, they've had horrible performance and are actually down by close to 10% in the past 5 years, but that doesn't really matter to me because I bought it well below $30 a share. And the reason I decided to jump in is mostly due to 3 quick reasons. Number 1, the massive dividend that currently yields close to 6.5%, but because I bought the stock at lower prices, my yield is actually well above 7%. And they've also increased that dividend every single year for the past 35 straight years, which is the largest out of any stock I own. Okay, reason number 2 is that the valuation is pretty reasonable, as the stock trades at less than 9 times next year's earnings. And finally, reason number 3 is that despite going through a lot of struggles right now and the fact that their balance sheet is horrendous, I feel that they do have some potential to turn things around in the future thanks to their investments in 5G and their acquisition of Time Warner that will fuel their own video streaming service to compete with the likes of Netflix and of course Disney. Okay, and that brings us to another stock that I also purchased for the very first time at the end of last year when everyone was selling out of the market, and that's Alibaba, ticker symbol BABA, coming in at about 6%. And I'm glad that it's still a relatively small position for me because the recent trade war has kept this stock at some pretty low levels, and I want to keep buying at these lower prices, especially anything under 150. Still, they're up by over 70% in the past 5 years, but they dropped by almost 20% last month alone. And you've probably heard of them. They're a Chinese e-commerce company that is often compared to Amazon, and they have experienced some insane growth despite the horrible economic conditions of China right now. In fact, they just reported their latest fiscal year, and sales grew by over 50% year over year, while their cloud segments grew by a massive 84%, and they brought in over $15 billion worth of free cash flow. So this is a very exciting company in my opinion. Okay, moving along to stock number 6, that's going to be JP Morgan Chase, ticker symbol JPM, at about 6%. And there's not really much to say here. This is just one of the most well-run banks in the world, and it offers my portfolio some diversity from all the tech-heavy stocks that I currently own, and it also pays out a pretty decent dividend as well. Now, in the past 5 years, they've gone up by close to 100%, so really solid performance. And when looking at their financials, they consistently bring in a large number of sales and profits, with last year seeing them top over $100 billion in revenue, with over $32 billion of that going straight to their bottom line as net income. And looking at their dividend, it's yielding less than 3% right now, but I bought the stock a long time ago, so mine is a bit higher, and they still have a good payout ratio of just 35% and a 5-year growth rate of over 18% and 8 years of consecutive growth. And that brings us to stock number 7, and that's going to be Taiwan Semiconductor, ticker symbol TSM, at about 4% of my portfolio as well. And this is a semiconductor company that builds chips for companies like Apple and of course AMD. In fact, one of the reasons why I invested in them in the first place was because they were going to build AMD's 7nm chips, which are now gaining a lot of attention as well. Looking at their stock, they've performed very well in recent history, climbing by over 84% in the past 5 years. Admittedly, this used to be a much bigger position of mine, but I've sold a couple times to lock in some profits, but I'm still willing to hold the remaining 4% that I have, mostly because they have a pretty nice dividend that still yields over 3.3% and has been growing at some pretty nice rates. Of course, I do worry sometimes about holding chip foundry stocks too long because they can be a little cyclical, but at the same time, I like the fact that some of their biggest customers are companies like Apple and AMD, and it gives me some comfort just because there's so much innovation that goes on with those companies and also with TSM, with Taiwan Semiconductor. So in my opinion, that makes their products a little less comparable to something like a commodity. Okay, and that's a great segue into stock number 8, which is of course AMD, ticker symbol AMD, at about 4% of my portfolio. And AMD has been extremely good to me as they are up by almost 700% in the past 5 years. And as you guys know, if you're an old school viewer of my channel, AMD used to be my second and third largest stock for a very long time, and I was buying it very heavily at under $10 per share. It's actually one of the reasons why my channel kind of did so well, is because I would talk about AMD so much. But as you guys also know from my videos, I started cashing in some profits at over $20 and $30 per share, and I just haven't found too many buying opportunities since then, except for a couple times that it did dip under $20, but regrettably I did not take advantage of those opportunities. But in any case, I'm still holding a long-term position in AMD at about 4% of my portfolio for a couple of different reasons that mostly involve their new 7nm chip lineup that is helping them gain market share from Intel and NVDA, and because they will also be powering the next generation of home gaming consoles like the PlayStation 5 and the next Xbox. And that is yet another great segue into stock number 9, which is NVIDIA, ticker symbol NVDA, coming in at about 3% of my portfolio. And this is actually a much newer addition that I started buying right after the big market correction that we had at the end of last year, where the stock got destroyed and crashed by more than half of its value. So right around the 150 or less kind of area is where I've been buying the stock, and I'm about even on my position right now. So if it continues to sink lower, then I could potentially be down quite a bit on my position. But in all honesty, I actually do want that to happen because those are really the only levels where I feel really comfortable adding to my long-term position in NVIDIA. And that's really what this is for me. NVIDIA is a long-term play on some huge buzzword kind of trendy markets like the data center, autonomous driving, gaming, artificial intelligence, machine learning, deep learning, and so on. And NVIDIA is a semiconductor company that designs chips and platforms for all of those markets, so that's one of the reasons why I like them. But they also may turn out to be a pretty decent dividend growth stock, as their yield is laughably low, but their payout ratio is only 12% with a double-digit 5-year growth rate. Obviously, the company is struggling right now in sales because of the whole cryptocurrency crash and a couple of other issues as well, but I'm hoping that they start to turn things around later this year. And that brings us to stock number 10, which is Nintendo, ticker symbol NTDOY, at about 3% of my portfolio. And this is another stock that my old school viewers may remember, since for a very long time, Nintendo was actually my #1 largest stock, and I was buying it extremely heavy, mostly anywhere around $30 a share and sometimes a little bit above, but ultimately I decided to cash in some very nice profits when it broke out above 40 and 50. So I just had a lot of luck with this stock because I saw that they crashed due to the failure of the Nintendo Wii U console, but I just knew that the Nintendo Switch would be a huge success, so I flooded into the stock and rode the wave up. Now more recently there was a buying opportunity at under 40, but I have to admit that I did not take it because I just have too many questions about the decisions that the company is making, what management is doing. But so far I've been wrong because the stock has surged in 2019 and is up by over 35% so far year to date. In any case, I do not have plans to buy any more, and I'm just kind of holding my last 3% as a long-term investment because they have such strong brands and IPs like Mario, Zelda, Donkey Kong, and of course Pokemon. Pokemon is a much bigger franchise than people realize. But anyway, okay, here's where it starts to get interesting. Now, this next stock is not actually a single stock, but it's the speculative portion of my portfolio that I try to keep at less than 10%. These are usually unprofitable companies that may either have high growth or some decent future potential, in my opinion, so they're just like long-term gambles for me, and I fully expect to lose my money in these stocks, but I hope for the best. Alright, now the pie chart is going to look a little weird here because we're going to break up the speculative portion into 3 different stocks that I currently own. So let's go ahead and do that. Okay, now we can see that stock number 11 is Tesla, ticker symbol TSLA, at about 4% of my portfolio. And you guys know them, they're an electric autonomous vehicle maker, and when looking at the stock in the past 5 years, it's been extremely volatile, but I finally decided to jump in just a couple months ago when it crashed to about the $250 range, and I've been buying slowly anywhere under that to average down as it continues to crash. Now, admittedly, I am still down on my position, but thanks to averaging down and the most recent little rally here that we had where they jumped by over 10% this past week, I'm starting to get somewhat close to breaking even right around these levels, but I'm still down a little bit. Having said that, I'm still hoping that the stock crashes further because I do want to keep adding to my position, and honestly anything under $250 per share is pretty reasonable to me, as long as it doesn't become too big of a position in my portfolio. But the reason I like them is because of the growing EV and autonomous vehicle markets that many analysts think will eventually overtake traditional ICE vehicle sales in the not too distant future, so I just want to be a part of that. Okay, and that brings us to stock number 12, and that's going to be NIO, ticker symbol NIO, at a little over 3%. And this is like a Chinese Tesla wannabe, and the reason I invested in this company is because the Chinese EV market is worth more than any other EV market in the world, and it's not even close, and the dominance should probably continue well into the future, so NIO kind of gives me a little bit exposure to that market. Having said that, the stock has been absolutely obliterated lately, falling by over 55% this year alone. And while I did cash in some profits when it was above $10 a share, and then did most of my buying very slowly at the $6, $5, $4, $3, and even $2 ranges, I am still down by over 30% on my position, so it's a real failure in my portfolio right now, but thankfully it's just a small portion at around 3%, so I can't really complain too much. In any case, I think I'm done buying the stock for now because it just continues to crash, and I already have a big enough position at an average price that I kind of like. So I just want to see how this company performs in the near future before I decide to add any more money. Okay, and that brings us to the last stock of the day, and that's going to be TWOO, ticker symbol TWOU, and this is another spec play that takes up about 1% of my portfolio, and they are an online education company, and I just think that online education is the future, so TWOU gives me a lot of exposure to that market as they're already partnered with some of the really big name universities like Harvard, Yale, UCLA, USC, NYU, UNC, and many more. Now, I had only been tracking this stock for a very long time, but they recently released earnings that disappointed Wall Street and the stock crashed. So I decided to take that opportunity and buy into the stock, and I've been averaging down a little as it continues to crash. But despite averaging down, I'm actually still down on my position by about 10%, maybe a little more than that. In any case, this is mostly an unprofitable company that is growing sales at a pretty high rate, with revenue jumping year over year by over 40% last year and by over 30% this latest quarter, but losses were also a lot higher climbing from $6 million to a loss of $8 million in this last quarter year over year. So it's a company that is still struggling to be profitable, but I want to see where they go in the future. Okay, I think that just about does it for this video. I hope you guys enjoyed it. If there's any stocks that you guys are also invested in, let me know in the comment section. And if there's any stocks that you think I should be buying, or maybe that I should be selling, like if you don't like any of my stocks, let me know as well. I'd love to read those comments. And I think that's just about it. I'll catch you guys in the next video. Take care. Bye-bye.